Okay, we'll get started. Welcome everyone to today's Emerging Market Strategy Update webinar, which is going to focus on Korea. I'm Eric Anderson, and I'm the head of Emerging Market Investments at Milltrust International, which is a London and Singapore-based asset manager with a core focus on delivering global emerging market investment solutions to investors. For today, after a very brief introduction from me, we're going to hear from Korea investment manager SPARX Asset Management. Some of you will recognize the name SPARX, which has over 30 years of history of delivering investment solutions to clients. It started in 1989, initially focused on Japanese markets before setting up in Korea and bringing with them the same investment approach of identifying overlooked and undervalued high-quality businesses through fundamental bottom-up stock selection. They're essentially leveraging off their local intelligence to generate alpha. Last year, this Korea strategy beat the index by over 40%, returning 70% net return versus 39% for the index. Clearly one of the better performing Korea strategies in the world. Now, as allocators to emerging markets, there is a lot to like about South Korea at the moment. The macro backdrop for relative earnings is improving. The relative performance relative valuations are attractive. Positive semiconductor earnings momentum has broadened to banks and sectors and healthcare. There are a number of sectors in the economy that are benefiting from the recovery in Chinese demand. Policy will remain reflationary, currency is attractive. And despite the recent outperformance, Korea still trades at a discount to their EM counterparts. So we certainly like them in our global portfolio. After the short presentation by SPARX, we will then have the opportunity to open up to questions. To ask a question, simply type it in the Q&A section in your Zoom panel. You can ask them at any time and during the presentation, and we'll get to them at the end. We'll try to keep the presentation fairly short, so if we don't have a chance to get to about 30 minutes to get to your questions, we'll follow up afterwards. Now, before heading off to SPARX, I just want to give everyone a quick overview of how Milltrust fits in. Our approach at Milltrust is to identify locally based investment managers in each of the key countries and regions across the emerging markets who are specialists in putting together high conviction portfolios of high quality companies. Each specialist team, which you can see here on the map, manages their regional portfolio within a sub-fund on the Milltrust Emerging Markets platform. These sub-funds form the basis of our global EM strategy. And investors can either invest directly into the sub-funds, such as the Milltrust SPARX Korea Equity Fund, and build their own exposure to these countries and regions, or invest through the Global Emerging Markets Fund, which allocates across the sub-funds on the platform. So that's probably enough for me. I'm now going to hand over to Ken at SPARX. Over to you, Ken.
Thank you, Eric. Hello, everyone. Thank you for joining us. For SPARX Asset Management Korea's business development team, I will use today's time to briefly introduce you about our investment philosophy in equity market and the characteristics of the Milltrust SPARX Korea portfolio, and followed by Q&A sessions at the end, as Eric mentioned. Upon request, Milltrust and we can set up sessions with the portfolio manager to go over the further questions and details of the portfolio. So let me guide you through our investment philosophy first. So since the foundation of our group is that macro is the aggregate of micro, with that, we focus on understanding the fundamentals of the companies to form a solid understanding that can support the conviction on a subjective company. We conduct more than 1,000 research activities per year. When we conduct research, we look at the quality of the earnings, market growth potential, management strategy, and earnings forecast to understand the value of the company. There are approximately 2,200 companies listed in Korea. Out of that, we conduct an initial screening to create an investment universe that consists of companies with certain levels of liquidity, market cap size, debt servicing ability, and more. From that investment universe, a pool of investment candidates are created specific to each strategy. For this strategy in specific, the portfolio manager has approximately 130 names or more, depending on her research results, as her investment candidates. And from there, she carefully picks 30 to 40 names to include into her portfolio. So these are the criteria the portfolio manager looks for when evaluating company. As the portfolio looks for small to mid-cap sized companies that are advancing, it may be difficult to meet, the company may be difficult to meet all of the criteria. So The portfolio manager looks for a company that meets some or has the potential to meet some, and this varies depending on the status or the industry that the company is in. And this is the summarized profile of Korean listed equity market. KOSPI, which is the major index, is approximately 1.75 trillion US dollars big. And entire Korean equity market, including KOSDAQ, which is composed of tech stocks and relatively mid to small cap sized companies, the entire market is approximately 2 trillion US dollars. There are 786, 782 companies listed in KOSPI right now, including the KOSDAQ. The number goes up to all the way to 2,200. Over the top 10, you can see some famous names such as Samsung, SK Hynix, Hyundai Motors. Those are the major companies that are taking up the market cap size for the Korean market. As you can see, Samsung takes up a very big portion of the index. This is the KOSPI, the major index, plotted along the net profit. As you can see, since the drastic fall of net profit, which is plotted here in orange, in 2018, it is showing dramatic recovery and improvements. The level of net profit is well supported by the strong global market share claimed by the Korean companies such as Samsung, SK Hynix, Hyundai Motor, and Kia Motors. Korean equity markets valuations is very attractive. The level has remained low for quite some time. So many people wonder, the Korea is cheap, but it's always been cheap. So however, there are interesting individual investment opportunities. So instead of looking at the market as a whole, invest in combination of carefully picked companies may promise better opportunity. The composition of the equity market in Korea changed along with the global demand trend and in the direction of the global technology advancement. From a country heavily concentrated on primary or secondary industry companies, now has globally competent and leading companies with most advanced technology, such as Samsung Electronics, SK Hynix, Samsung Biologics, Kakao, Hyundai Motors, Kia Motors, and etc. What we found interesting is that some of the industry's subsectors have changed, meaning although the larger categories composition may seem to have not changed much, but the underlying companies have changed. For example, communication services, back in 2000 was composed of telenetwork providers in 2000. But by 2020, the industry is composed of more online platform service providers. Such change hints that the basis of the economy has shifted to higher level of technology and advancement. So Korea is renowned for its memory semiconductor prowess. Large companies such as Samsung Electronics and SK Hynix are planning to invest large amount to step into system semiconductor market, where the aforementioned companies have very little market share comparing to the memory market, where they have the dominance. For your information, system semiconductor market is approximately 400 billion US dollars, whereas memory industry is 150 billion US dollars. With that, the Korean government has also announced its plan to support the shift from the memory to system semiconductors to make the South Korea as a semiconductor powerhouse by securing the world's #1 spot in the system chip foundry sector by 2030. And achieving, of course, a 10% market share in the fabless area while maintaining the #1 position in the memory chip. Samsung Electronics also unveiled a very aggressive goal to become the leader in the semiconductor foundry business by investing 73 trillion Korean won in R&D and 60 trillion Korean won. 73 billion US dollars in R&D and 60 billion US dollars in facilities, totaling 133 billion US dollars by 2030. So this will not only increase the revenue, but will create a different ecosystem that is larger and closely intertwined. So where small to mid-cap sized companies will inevitably be promoted to grow because memory semiconductors can be mass produced based on a large scale investments, but non-memory semiconductors need a small scale production for multiple products. So going into corporate governance, which is probably the major reason for the low valuation of the Korean companies, we are seeing some changes happening. So agenda of board meetings usually covered issues around inheritance and succession plans back in the past. However, along with closer monitoring of corporate management by government regulators and investors, corporates are starting to gearing up to preserving and improving the corporate values and shareholder returns. So this is the Korean New Deal. Korean government has introduced a large-scale economic stimulus package designed to help the nation withstand the economic challenges faced during the COVID and also to advance to become the global leader. So as I mentioned back in the semiconductor slide, this is the digitalization part is actually a part that covers the semiconductor monetary support that government has promised. So total of approximately 145 billion US dollars will be deployed until 2025, divided to, as you can see, digital and green. This package is supported by the government policies and will likely be promoting the growth of the digital and green area of the nation. So these were the catalysts that we are seeing on ground. And let me touch upon the characteristics about the Milltrust SPARX Korea Equity Fund. So these are the top 10 names. As you can see, Samsung, Dasun Bison, Song, Naver are there. But what I would like to highlight here is the sector allocation. So as you can see, we have zero exposure in energy, financials, utilities. This is the pure result of the portfolio managers, a fundamental bottom-up research. So we don't have, I don't want to say that we have a sector bias, but the portfolio manager depends she makes the weightages and she decides on the weightage based on her research, and she does not, and she looks for the area where they can sustainably grow. That is why she tends to not include every company in every sector. So as you can see, there's a sector difference here. And also market cap exposure, as you can see on the bottom here. She has a very high concentration on the mid cap and small cap area. As you can see, the difference is approximately more than 50%. And large cap companies, although we have Samsung, Naver, and there, it only compared to the market, she's 57% underweighted. So her portfolio is not trying to replicate what's happening in the market, or it's not trying to copy the weightages. It's only the result of her conviction, and some of the companies even Samsung, she takes it as an individual opportunity rather than as a mean of following the Kospi's Kospi's composition. So I know we have only limited time, so I'll stop here, and maybe we can spend the rest of the meeting time as a Q&A session.
Yeah, thank you, Ken. Yeah, just on schedule there, 15 minutes. Why don't we talk about Samsung? Because it's you made a point about not holding Samsung just because it's the largest position in the index, and that's very true. Last year, that Samsung wasn't in your portfolio. I mean, you still beat the market by a significant amount, and you didn't hold the Samsung. I think it only came in maybe in October, towards the end of the year. Now it's your biggest position. So so maybe if you can kind of explain that the conviction level in Samsung that you have today and why that changed from last year, that'd be great.
Okay, thank you, Eric. Okay, well, I think that's a very interesting point. So, before, the portfolio manager did not have any exposure on Samsung. It was completely zero, and then she started to accumulate some weightage on this company because she saw, not because Samsung, but as I have explained in here, she saw this changes that's happening in semiconductors area. So. Initially, initially the semiconductor industry that Korea was very good at was the memory semiconductor, which can be mass produced, and that is why Samsung could have done a great job over the past years. But then with TSMC solidifying its position as the global number one as a system last year, Samsung saw there was a bigger pie to share in the system. And with that, she found out the Samsung was probably the only company that can stand against TSMC. And with that, she realized some of the companies are turning their heads from the TSMC to look for other competitors for price issue, for quantity issues, and etc. So she decided to look at Samsung as an individual opportunity. She saw there was, although the market cap is very big, and although the company is already a large cap, mega cap almost in Korea, she wanted to take this opportunity as a so-called semiconductor big wave to say, and she thought Samsung will be beneficiary of it. And some of the companies in her portfolio, say here Lino. Lino is the company that is also benefiting from this shift from the memory to memory to system semiconductors, because this is a testing company. So regardless of how many semiconductors are produced, you cannot guarantee the quality of the semiconductor if you don't have the testing company. And Lino is one of the it's the market cap size, as you can see, it's not too big, but at the same time, their clientele is already global. So she thought this company can benefit from growth of Samsung Electronics, which is turning head to system semiconductors and etc.
Okay. Okay. No, that's interesting. I mean, in terms of, I mean, we talked about Samsung being a large cap, but the before is more focused on mid to small cap, because that's where you're seeing, especially mid cap, the opportunity. What are some of the factors that you see driving that? And a lot of clients like your portfolio characteristics and that it's a good blend, the mix there. What is really driving that mid to small cap return? What are you seeing there? Maybe you can talk about that.
So I think we have several reasons. The first, mid and small cap stocks generally outperform during an economic upturn. Second, higher growth potential in mid and small cap stocks. Many names represent new businesses and structural growth industries. We believe, I mean, of course, we're excluding Samsung in this argument here. We believe will play a significant role in reshaping the future of the Korean economy. Third, more attractive valuation in mid and small cap stocks, which are less covered by the market. Fourth, valuation re-rating for those who are able to enhance earnings quality. In general, earnings stability in mid and small cap companies is weaker than that of the larger companies because many are highly dependent on a defined group of domestic customers or a specific region for sales. Often you will find these companies suffering from price competition. However, we have identified and will continue to identify these companies at early stages, which have been able to diversify their domestic customers and regional base to strengthen earnings power and secure the growth. Fifth, corporate governance improvement across all segments of the market is the new normal. So especially in the mid and small cap companies, which are typically family owned, are now at the cusp of generating the change, generational change. New management are globally educated with ambitious to compete on a global scale, so they will be looking to improve those corporate governance issues. And sixth will be the North Korea opening up economically is a long dated call option that may provide additional source of return for our investors.
Okay. That's it. I've got a few questions on, different sectors, and I know you said you don't have a sector bias, but, and I'll combine some of these questions here. One question is about, new economy stocks. So the sector is focused on new economy versus more domestic focused stocks. Other one talks about the Green New Deal, so more focus on the green economy. What is your view going forward? Do you have is there a thematic view there? I know you don't have a sector bias, but maybe there's some lean there with those bigger themes. Maybe if you could just talk about those.
Right. The strategy itself is not, as I said, it's not sector allocation driven. In the characteristics or the analysis section, as you can see on this slide, you may see that some of the sectors she has almost zero allocation. In other words, she does not pay attention to the covering all sectors. She tends to pay attention to purely capturing the opportunities that a company possesses through a fundamental bottom-up research. And she is a believer that the value of investing in her strategy is the uniquity of the portfolio constituents. Of course, you can see Samsung and Naver, and of course, even those individual names are treated as single items. That is why she spent most of the time excavating stocks that are overlooked by the market and yet possess growth potential that can be sustained. And in order to find good investment candidates, she spends great deal amount of time trying to understand a holistic picture of a company. So all investment decisions are based on the outcome of her research activities, and her convictions for each name in the portfolio come from her confidence that she knows the company very well. And in order to create the portfolio with a level of confidence, I think she will continue to do the research process that she has been conducting so far. And I think that addresses the sector bias question. And you mentioned something about the Korean New Deal.
Yeah, I mean, is that a theme? Because is that a theme that's obviously CS Wind was a big performer last year with
Right.
wind turbines. Do you
Right.
see more opportunities there? Is that this year?
Well, I think I can address it in a more not probably too specific to CS Wind or the Korean New Deal, or maybe how the portfolio manager views opportunities as. So last year, before last year when COVID broke out, we've been asked many times whether she made any changes to her portfolio. And of course, when we look at her portfolio, CS Wind, which is a wind turbine tower maker, seems like a great beneficiary from the last year's economic stimulus package. But green and digitalization were the top topics that she already looked into. And she's been looking into these sectors even before there were the wording came out from the government or anyone else actually started to mention about green or digitalization in Korea. So with that, I think the portfolio looks at more longer term sustainable growth potential. Of course, Korean New Deal, the government introduced this package, which is in line with what the society was going to go. And we believe this deal package has only worked as a catalyst to shorten the timeline that was already in front of us. And that in that sense, the portfolio manager was already looking to 3 to 5 years happening. And for example, CS Wind, will it do as good as it did last year? I wish I had the crystal ball to tell you that it will maybe grow further up or anything like that. But I think her portfolio, she will try to trim down the position, but because her investment horizon was a lot longer than just 1 year, so she will continue to hold this. And once there is a stock price movement, it's either trim or accumulate more position. I think that's how she will approach these kind of opportunities.
Okay. And I just want to tell everyone here that SPARX writes some excellent monthly commentary with security review themes as well. So we do get some good visibility on a monthly basis. So going forward, if you're not on the list, please let me know, and then you'll get some good commentary from the investment team. Final question here, Ken, so we can wrap up on 30 minutes. There's a few questions on this one about retail investors. Right. So, yeah, we've seen the big inflow, in day trading, and we see that in many parts of the world, but in Korea as well. Is this a lasting trend, do you think? And, does this impact you in any way, your choice of stocks? And maybe talk about, the retail side of things.
So thank you. I mean, that's um, when the COVID dragged the market down last year, many young individual investors started to jump into the equity market expecting the market rebound. And when the market dropped down even more, their strategy was not panic, but start to learn to accumulate more shares. At the same time, the reason for that was not because they saw the rebound and they saw the value in Korean equity market, but it was more like the entire society as a whole. Korean market is very interesting that individual household, approximately 80% of their wealth is composed of their real estates and so on. But as some of you already may heard, the Korean housing market price increased a lot last year. It's almost impossible for young generation to buy a house, even with the house mortgages. So I feel from that sense, the young individuals, they wanted to look for investment opportunities where they can grow their wealth. And I think stock market served as a great tool for them. And so will this be a lasting trend? I think it's a new norm now. Young generation, unlike the previous generation or the generation before that, they're not afraid to go into stock market because there's already riskier or the risky asset change from stock to Bitcoins. So Korean young generation, they're viewing stock as relatively safer investment haven compared to investment vehicles like Bitcoins or other more riskier assets. So housing market, it has never come down over the past 10, 20 years. So I think with the money is staying in will be staying in the equity market for longer.
Okay. Well, that's always a good tailwind. All right, Ken. Well, thank you for that, for speaking on behalf of SPARX and your investment team. As I said, the SPARX team are always available for one-on-one meetings. As I said, they write a good monthly commentary. There's really a lot going on in Korea. As I mentioned in my opening pitch, we were overweight the strategy and the region, so certainly something to look at. With that, so I'll conclude the webinar now. Thanks, Ken and the team, and thanks everyone for attending. I'll be in touch with the write-up of the webinar for everyone to review. But thanks again, and everyone have a great day.
Thank you, Eric, and thank you everyone for listening.